All right. Well, I have 12:30, so we'll go ahead and get started. I want to thank everybody for being here. I think probably most everyone on the call knows me. I'm Cindy Finiseth with the Kentucky Horticulture Council. And this webinar is kind of bridging two different programs that we have. So one is our crop insurance program that's wrapping up this month, where we've been doing a lot of sessions to help growers learn more about crop insurance and learn how to participate and the value of doing that. Unfortunately, with two really severe weather events in this last year, it's been really important, and we've had a lot more interest from growers. So Dakota, I'm sure he'll talk about this, has put together a really nice suite of information to help growers understand the different options, but also to help ag professionals help growers navigate through those different questions they may have. And that's really the point of today's webinar, is to talk to you as ag professionals about crop insurance options and how you can help growers. And this is part of a series that the Hort Council and the Organic Association of Kentucky and UK Center for Crop Diversification, CCD, have been doing and will continue to do for the next year on different topics to help ag professionals really provide topical information to growers to help them with different types of practices. And I want to invite you to the next webinar that we have in that series. It's 2 weeks from now on October 11th. And I put a few different webinars and events that we have coming up here just to let you know if you don't know of them, or remind you if you did. We'll also have a blackberry production field day in October. That's in Paducah at Garrett Farms in McCracken County. And then an online webinar for Christmas tree production. We're seeing a lot of questions about Christmas trees, so we're going to do a webinar with UK Horticulture on the 27th of October. And then a Western Kentucky Grower Buyer Meetup, which is basically a speed date between producers, and that's all kinds of producers, not just specialty crop growers, and different types of buyers. And that's going to be in Owensboro at the Davis County Extension Office, and that's in November. And when I send out the link from today to the recording, I'll include some information about this, and then be watching the listserv for promotional information that you can send out to growers. And today's webinar is really, like I said, for ag professionals, as is the October 11th. It's really more for ag professionals, not for farmers. But those other three webinars certainly are events, the Blackberry Christmas Tree and the Grower Bar Meetup. And then just a reminder about a couple of upcoming oak events. The Farm Field Day on October 4th in Western Kentucky, and then an online CSA marketing with Corinna Bench. That's the 1st of November. And then, of course, just save the date for fruit and vegetable and turf and landscape short courses in 23. So I've taken way too much of Dakota's time. I know he's got a lot of information to share with you all. But as we go through, if you have any questions, feel free to drop those into the chat. And then, of course, afterwards, you can always follow up with other questions that you might have. So thanks again for joining us. And Dakota, take it away.
Okay, let me pull up my screen and we'll get going. Okay, I hope everybody can see that. Like Cindy said, my name is Dakota Moore. I work at the Kentucky Horticulture Council. I know several of you on this call. Some of you I haven't had the pleasure of meeting yet. But today we're just going to go through some basic crop insurance policies and programs and kind of get you introduced to those, so you can kind of have a basic knowledge of those, and then kind of talk about how we can help the farmers and growers we work with go about learning about crop insurance, preparing to participate in crop insurance, and hopefully getting them on the track to protecting this aspect of their operations that sometimes isn't as protected as other parts. So first off, I want to start off with, why do farmers need crop insurance? So the academic answer, if you read all about crop insurance, it's going to say to protect against revenue loss caused by crop loss, yield loss, and changes in price. Some things say farmers need it to ensure their investment, especially if there's multiple partners, if in a large operation. Maybe one of them wants to ensure their investment isn't lost. And then another reason is it's needed for the terms of a loan. But those are all very academic answers, very removed from the human aspect of it. But farmers really need crop insurance to ensure that their operation and their source of income is protected. A lot of farming now is, especially with specialty crop growers, we see one or two of the farmers leaving their day job to do this full time. That's their only source of income. And if they were to lose their crops to a disaster, they would lose that income. So not only could they lose their crop to a natural disaster, they could lose more than that. It's all about protecting their livelihood and ensuring that their families don't face hardship because of a loss. We protect our homes and our cars, from financial ruin by getting insurance to protect against, damage. We get health care or health insurance to reduce the burden of the cost of health care. We also insure our businesses. So we might get insurance on our structures, on our equipment, also liability insurance. But not a lot of farmers, especially specialty crop growers, are protecting their revenue or their income. And crop insurance is how they go about doing that. With the recent natural disasters we've had in Kentucky, it's pretty evident how much losing a crop or a yield can affect the growers. So with the December tornadoes here in Western Kentucky, we saw that a lot of farmland was impacted. Luckily for row croppers, it was in an off season. But if that had happened, this month or a month ago, farmers would have seen a huge impact and a huge loss in yield, just like farmers in Eastern Kentucky are seeing right now. This floods hit right at peak production as harvest was coming in for many crops. And you can see how much destruction of that crop affects the income of these farmers. And with the current drought conditions here in Western Kentucky, I can look out the window and see corn that's 1.5 feet shorter than it should be, and that's 1 or 2 ears less than the farmer expected. So that decrease in revenue could impact them negatively. So before we get into some of the policies and programs, we need to talk about what causes of loss are insurable. So a lot of human-caused issues are not insurable. Most of these are going to be things that are out of control of the farmers. So natural perils like weather events, tornadoes, floods, and drought, and natural disasters, earthquake. Also, volcanic eruption is included in there. We might be affected by smog potentially, but those types of things are going to be covered by most policies and programs. Some of the policies are going to cover living threats. So insects and disease, but that's only if the proper control measures were used. So that's important for us as ag professionals to remind the farmers and growers we work with to keep records, prove that they were doing those IPM measures to control that insect or pest, whether they're organic or conventional producers. If they keep those records, then they can show, hey, this was uncontrollable. And then the policy might cover that damage. There are a few other things that will be covered by some policies, like prevented planting. That's usually caused by those weather events. And then losses in revenue due to price change. That's a big one for especially large commodities like the row crops. That change in price can drastically reduce their revenue. And then a loss of market. That's important for a lot of our direct to market farmers. If they're selling to maybe one market mainly, and that's their main source of revenue, if that market were to close for whatever reason, especially during peak season, that could really impact their revenue. And I just want to preface that this is the general list, and some of these won't be covered by certain policies. So just keep that in mind. Now I want to get into those policies and programs. I'm going to just hit on a couple, the ones that are most common amongst Kentucky farmers and our specialty crop growers. So the first one comes from the USDA Risk Management Agency, also known as RMA. And so they are the government agency that creates these crop insurance policies. They write these policies, they make them available to growers, and they also approve the crop insurance agents that sell these products. So if it's a RMA product, it has to be sold by an approved crop insurance agent. So this first one is multi-peril crop insurance. So this is what row croppers usually have. This is the most common form of crop insurance. This is typically for those crops that have large acreage. And with this policy, you need one policy for each different crop. So if a grower has, one or two big commodities, they're going to typically go with this multi-peril crop insurance. And with the MPCI, this coverage varies by crop and by county. So in Kentucky, most counties have coverage for those big crops, corn, soybean, and tobacco. When it comes to the specialty crops, that's a different story. So in 2022, there was only one specialty crop, one fruit and vegetable crop that had coverage here in Kentucky, and that was peaches. And it was only available in 2 counties. So this policy is not going to work best for those specialty crop growers and those smaller farmers. The one that's going to work best for them is the whole farm revenue protection. So this policy is also from the RMA, and this combines everything on the farm under one policy. So whether you've got, tomatoes and strawberries and goats, it's going to include it. It also includes any value-added products that are produced on the farm. And that will also include some buying in as well. So if you have to buy in products to create those value-added products, that still is allowed. And this program is available in every county in the US. So any farmer in the US can have a whole farm revenue protection policy. And this policy provides protection against a loss in revenue. It's in the name. The MPCI policy deals more with your yield. So it's going to look at a decrease in yield. This is going to look at a loss in revenue. So it doesn't matter what your individual crops, bring in. It's as long as there's a total loss in the revenue, then you'll receive a payment. The one drawback to this one is that you have to report individual revenue for each commodity. So you do have to report that revenue and expenses for your tomatoes, for your strawberries, for your chickens, whatever it is. You've got to keep those separate records. And that can be a lot for some growers, especially direct to market growers with multiple crops, to keep track of every week at the market, how many tomatoes you sold, how many strawberries you sold, and what that revenue was. So that can be a little difficult, especially for those smaller growers. So the RMA realized that a lot of these specialty crop growers were not participating in this policy because of that reason. And it's also a burden on the crop insurance agents as well. It's a very intensive application process. So unless an agent knows what they're doing and has experience with this, it can be difficult for the agent and the farmer. So this year, the RMA introduced the micro farm policy. So this is the same exact coverage and protection as the whole farm revenue. So everything on the farm is under this policy, but it has significantly less reporting that is required. This policy takes all the commodities and puts it under one commodity code. So you just have to know your farm's approved revenue. And the microfarm policy and the whole farm revenue, they pull that revenue from your tax documents. So it looks at the Schedule F. If a farmer is farming, they've got to fill out the Schedule F when they do their taxes. That keeps a list of all their farming expenses and all their farming, income and revenue. So it pulls it straight from that, and it's ensuring that revenue. Well, with this microfarm policy, to participate this year, you needed less than $100,000 in approved revenue. So this was really for those very small farms that do want to protect their revenue, even though it wasn't over $100,000. This year, however, the RMA increased that max revenue to $350,000. So that opens up a lot of farms to be able to participate in this policy. And this is when I would stress for you to talk with your growers and your farmers about, or point them in the right direction to get more information. With significantly less reporting, they're not needing to keep track of individual commodity revenue. They need no expense reporting at all, which is a huge time saver for a lot of growers. So really, you're just needing that revenue, and that's pretty much it. You do need a list of the commodities you have, but this one is supposed to be, it was designed to be easier for growers and those agents. The next one is the Non-Insured Crop Disaster Assistance Program, or NAP. That's a mouthful to say, so they just call it NAP. And this one comes from the FSA. And this program protects against loss from damaging weather events and natural disasters. Like the MPCI, the multi-peril, this is a separate policy for each commodity. So this might not be best for growers with a ton of different crops or commodities. This is going to be for those growers that maybe really just want to protect one crop they have. Maybe they only have one large commodity. A lot of fruit growers that might only grow one type of fruit, this might be best for them. But the NAP is significantly cheaper than the multi-peril is. So this one is definitely more affordable. And there are some benefits we'll talk about in a minute for some of those limited resource growers and veteran growers. The next one is the Tree Assistance Program, or TAP. This one is financial assistance to replant or rehabilitate nursery and orchard trees, bushes, and vines that are lost to disaster only. So this is any trees, bush, or vine that someone is growing at a nursery to then sell the tree, bush, or vine itself. And then any trees that are being, trees, bushes, and vines that are being grown to sell the fruit or nuts from. But the one that makes this program different is that you only apply for this after a disaster. And it has to be within 90 days. But there is nothing that is needed beforehand. So this is one for us as ag professionals to keep in mind, especially if anyone we work with experiences a disaster. They give you that 90-day window. So you deal with the initial shock of the disaster, and then we can come in as ag professionals and say, hey, I know your trees were damaged, apply for this program, and they'll give you a percentage of the cost it takes to replant or rehabilitate. So this could be a saving grace, especially for those established orchards. Sometimes they need a little bit of help. It's not going to be the full cost, but it'll be some help to replant at least. Now, some of those extra benefits I mentioned. So for beginning, limited resource, socially disadvantaged, and veteran farmers, the NAP program provides a 50% premium reduction and a waiver of application fee. This is a pretty significant help for those farmers that fit those categories. The NAP is already one of the cheaper options, And this premium reduction opens up higher coverage levels to them. So it can make it very affordable. The NAP does have basic coverage, and that basic coverage is free except for the application fee. But if someone were to fit into these categories, that basic coverage would be completely free for them. It's not a huge payment if they lose crop, but it's at least something. So the TAP program offers beginning and veteran farmers a higher payment percentage. So it will give them a higher percent of the cost to replant. And then the MPCI and whole farm revenue policies also may waive some fees for people that fit into these categories. But the crop insurance agent would be able to tell them more specifically. There are some benefits for those that are doing sustainable practices. So the pandemic cover crop program, this was a program in 2021 and then 2022. It's not for sure if they'll do it in 2023, but that is still an option. But this program gave growers a $5 per acre subsidy for each acre that was planted in cover crop. So it gave them that $5, it took away $5 of their premium they owed for each acre that they had in a cover crop. And this was for those multi-peril crop insurance policies and the whole farm revenue policies. There's also some benefits for organic and transitional growers. So for the NAP program, they actually allow you to use the average organic market price if there's one available for the crop you're insuring with that policy. So when they make the policy, they look at the average market price for the crop you are producing when they make your coverage levels and tell you what your payment would be. But with the organic price, if there's one available for your crop, they will let you use that. And then also there's the Transitional and Organic Grower Assistance Program. And this was created for 2023. It was announced at the end of August. So there may be some more benefits to come from that. But right now we know that they will allow a 10% premium subsidy for all crops that are in transition, and a 10% premium subsidy for all whole farm revenue protection policies for crops in transition to organic or those certified organic crops. So it's going to reduce that premium that these farmers owe in order to entice these organic and transition to organic growers to participate in crop insurance, especially with those that are, in transition. This is a good way to, get used to the crop insurance as you go through that process. So I know we went through some of those policies and programs pretty quickly. So we have this chart. You can scan the QR code and it'll take you to this printout. It's also on our website. And this will allow you to maybe help a grower decide what they want to do some more research into, whether they want to do a single commodity or want to insure multiple commodities. So this can kind of help them see what they might be looking at. We as ag professionals can also help the farmers know where to go next once we talk to them about crop insurance, once we see that they have an interest. If they're looking at the multi-peril or whole farm revenue or the micro farm policies, we would want them to go to a crop insurance agent, because those are the people that are going to help them apply for those policies, and they would be able to answer any operation-specific questions. We wouldn't be able to tell them what their premium might be, how much they might, be paid if there were disaster, but those agents are the ones that can help them with that. They can use the USDA Risk Management Agency's Agent Locator tool. So this will give them a list of all agents that are licensed in Kentucky. You can find this on the RMA website. Just Google RMA Agent Locator Tool. It's pretty easy to use, but it does give you that list of everyone that's licensed in Kentucky. They don't have to be physically in Kentucky. They just have to be licensed here. And then the Farm Service Agency is where they would need to go if they've got any questions about the NAP program or the TAT program. So the FSA will help them with any answers or with any questions they have, will help them apply for those programs, and also make sure they've got all the necessary paperwork already on file for those programs. We can also help the farmers learn to maintain good farm records, not just for crop insurance. Farm records are important, to become better farmers from year to year. Any other programs you're participating in, they're good to have. But for crop insurance, most policies are going to need pretty intensive crop records. So things like planting dates, whether they were irrigated or not. Depending on which policy you have, you'll need certain expenses, you'll need the revenue. So we created a record keeping workbook, and you can find this on the Kentucky Horticulture Council's website. And this workbook they can print out and make copies of, and it's just a starting off point. It's not going to contain everything they need, because that is going to be different depending on their operation and their the policy they're going for. But it's a good place to start. The last thing we can do is remind them of deadlines and closing dates. So with the whole farm revenue and the micro farm, for most counties, that's going to be March 15th. So for coverage for next year growing season, you would apply March 15th, 2023. And as long as they're filing taxes, like calendar year filers are okay, but late fiscal tax filers may have a different date. But the importance with that date is, even though it's several months out, they need to be looking for an agent right now. Most crop insurance agents have not done a whole farm revenue protection policy before, and very few have done micro farm because it's so new. So some might be tempted to tell a farmer that they don't feel comfortable doing that policy, or they don't want to take on the amount of paperwork required for those policies. So it may take a farmer a little while to find an agent that's going to work with them on this policy. So they need to start now looking for an agent so that they can have adequate time to apply for this policy. And with the NAP, that one they need to go to the FSA and make sure when their crop closing date is. For NAP, those dates range from May to March. So if you were applying for coverage for 2023, certain crops have already had the closing date. Some of those dates were in May of 2022. So a lot of the vegetable crops, a lot of annual crops are going to be in March of next year. But some of the perennial crops are happening this fall. So any of those growers need to start looking into that right away. When it comes to crop insurance, it's hard for us to get growers to participate because it is a lot. A lot of them need to see, loss with their own eyes, or know of people that have, experienced a crop loss before they really start thinking about it. So this may be a, several years process of us talking to these farmers about protecting their risks, or, protecting their revenue, insuring against these risks. So if you can remind them of the closing dates every year that it comes up, they may become more interested in it as the years go on. But I think that is it. I've got my funding acknowledgements from the Southern Extension Risk Management Education and the National Institute of Food and Agriculture. I'll go back. If anyone has any growers that they want to send my way, I can email them some resources or talk with them about it. And if anyone else has any questions, they can drop them in the chat. Don't see.
It surprises me that micro farm is $350,000. I would say most of our growers would be ecstatic to have revenue of $350,000 per year.
Yeah, so my understanding is that a lot of like dairy producers can still be considered, smaller micro farms at that revenue price. For us specialty crop growers, that seems extremely high. But it doesn't affect any of the growers with lower revenues. So I guess that's still good for us. Let's see.
Did you see the question from Chris McKenzie about recommending an agent and updates?
So recommending an agent, if I don't have any that I would recommend, I don't know if I should recommend any, but there's a few I've talked with that are willing to do whole farm revenue policies. So if there's specific growers that you want to get in touch, I can try to get them in touch with those agents. The micro farm, like I said, it's brand new this year, so it's hard to find anyone that's got that experience. But some of the younger crop insurance agents are learning how to do those as that policy is more popular. And then NAP covers syrup production. I don't believe so, but it might. I know it does not cover timber trees. It will cover Christmas trees. So that's a good question about syrup production. I would have to look into that. And getting the updates. So if you can subscribe to RMA email lists, I get emails every few days. They're bad about dumping all at once, so it's a lot of information. Like at the end of August, we got tons of stuff. But that's it. And I try to update our Facebook with any new updates for our growers. Okay, Brooke, I know farmers often ask if there are recommended agents to work with for whole farm revenue and micro farm. Yeah, I'll try to put together a list. Yeah, I didn't feel comfortable giving a lot of information on webinars recommending someone, but I can try to put together a list to get to y'all with some to recommend. And just want to remind everyone of our YouTube channel. We've got all those recorded webinars and videos, and even conference presentations that were recorded. So send that playlist to anybody you want to.
All right, so we'll send out a follow-up email with some links and probably a quick survey question or two, if you would fill that out for us. And then, links to the different things that Dakota mentioned. And then, definitely if you have questions, Dakota's our in-house expert on crop insurance questions. So feel free to reach out to him. And then, we'll send links for future events. And we'd love to see you at another Hort Council event in the future. So thank you so much for joining us.